And good morning. You're watching Market Fatafat right here on ET. Now I'm Mubina Kapasi. Take a look at the market. We seem to be just about flattish, though with a positive buzz because we bounced as well very smartly from the day's lower 30-point bounce is what we are witnessing. But like I said, absolutely flat. On a percentage-wise, still said the Sensex seems to be doing better. 0.2% of gains witnessed over there. And in the broader markets as well, very mixed cues. Really just again, with the mid-cap index losing while the small-cap index is managing to hold out in the green. Realty once again reigning supreme and is one of the top sectoral gainers, followed by IT and pharma, while media is the big loser in trade. Well, let's talk about the big movers and shakers since this show is all about that. We have with us our team of research analysts, Siddharth Bamre, Soumya Sharma, and on the technicals we are joined by Gaurav Ratnaparki of Sher Khan and Kunal Bothra. Thanks to all of you for joining in. Well, let's kickstart the show with the very first stock, and it's got to be Jet Airways. Sources say that banks are actually mulling invoking Naresh Goyal's entire stake in Jet Airways. It's currently at 51%, but it will fall to under 25% after the conversion of debt to equity by lenders. So this is, of course, a big developing story. And, of course, do remember, they've been wanting Naresh Goyal out of the cockpit for a very, very long time. Secondly, the other big factor is that Etihad is actually offering a 24% stake to lenders for a price point of 150 rupees per share. And, of course, most importantly, the pilots have put their foot down, saying that they are not going to fly from the 1st of April, which means that all flights post the 1st of April are going to be in a limbo. So this certainly has spooked a lot of investors, and Jet Airways is down by a little over 4%. Kunal, let's go across to you now. Godrej Industries, why are you flagging this one off?
The stock is nearing a multiple breakouts, swing resistance breakout in terms of prices and also in terms of indicators. It's nearing a 200-day moving average breakout. Now we've been highlighting on the show that how the breakout of this 200-day moving average is a very crucial parameter to cross, because then it generally reverses a lot of the trend on the medium term side as well for many of the stocks. Godrej Industries is in line of breaking that resistance as well. So I believe a short-term trader can take an opportunity of buy over here. 560 plus could be a target range for Godrej Industries in the near term.
Okay, so that's Godrej Industries for you. Quite a sharp uptick witnessed in the middle of the day. Gaurav, can't get a rise of the realty space. Indiabulls real estate once again continues to perform well.
IBReal has indeed seen a sharp recovery over the last few weeks, and the stock has now entered a crucial hurdle zone of 96.98, from where the stock has reversed multiple times previously. So we need to see whether the stock manages to take out those levels and sustains in the higher territory. So once the stock crosses the level of 98, it can head towards 112, and those who are riding the trend can trail the reversal to 90.
Okay, well, that's the view coming in on IB Real Estate, which, like I said, has been rallying for some time. However, the news and updates on Jet Airways continues to flow in. We have with us Ruchi Bhatia joining in. Ruchi, it looks like there seems to be a scramble for funds for Jet Airways because, lenders have been asking Etihad as well as Naresh Goyal to pump in funds. Now, I think that meeting with the lenders has once again turned out to be inconclusive because Etihad is not willing to infuse funds. And from what I understand, even lenders at this point of time seem to be hesitant.
Absolutely, you've hit the nail on its head. The lenders are definitely scrambling at this moment. Last evening, there was a very crucial meeting of Jet Airways and Etihad. Along with lenders, we're given to understand that even though Etihad is flexing muscle, they want a way out of the current situation in Jet, and they're not willing to pump in more money. Lenders are really trying to figure a way out. Now, we are given to understand that while both Jet and Etihad are sticking to their initial stance, lenders again will be meeting to chalk out strategy. Remember, Jet Airways owe banks close to 8,000 crore rupees, and at this point of time, the airline needs more funds to be running, and March 28th seems to be an important day. This is the date when some of the payments, the ECB payments, have to be done. So lenders will be meeting once again to chalk out a strategy. Lenders currently are assessing the immediate fund requirements, the ECB payments, the dues that are needed to lessors and employees, because that will give them a fair picture that if at all they need to step in, then what is the amount of money that they will be putting in. At this point of time, all the other banks all the other smaller banks that have given money to Jet are keeping all their options open. Everything has been left to the head of the consortium, that is SBI. They will be figuring a way out of this very soon, and this is coming in at a time when the government is also watching out for a situation very closely. As we had reported yesterday, if the lenders go ahead and put in money and pump in money, then at a later stage they will be looking to cash out of it, and they would want an Indian promoter to be at the helm of affairs, which means that if Etihad wants a way out, then perhaps the lenders will agree to it, and they will, then see what needs to be done.
All right.
In order
Okay.
to bring it back to health.
Okay, Ruchi, thanks a lot for getting us that update. That's the latest on Jet Airways, and of course we'll keep you up to speed as and when things develop on that front. Well, moving on, Siddharth, let's talk about NIIT Tech. That's a stock from the mid-cap IT space you're flagging off. Why is that?
Well, yes, Mubina, because when IT space was correcting, the stock was consolidating. In fact, 2 months of consolidation we have seen, and today after 2 months of consolidation, we are seeing price volume breakout. And the first parameter why the stock was selected, because there is 17 to 18% rise in open interest, which means it is not just technicals, it's also derivatives factors which is leading to this up move. And we are seeing traction in some of the mid-cap IT names, so watch out for this name as well.
Okay, we'll just slip into a very short break right here, but don't go anywhere. The countdown of the top stocks will continue. This is Market Fatafat. Welcome back. You're watching Market Fatafat right here on ET Now. Let's continue with the countdown. Kunal, let's talk about Asian Paints. With the recent movement in Brent being recovering, but again with the rupee appreciating, there's a lot of confusion, I suppose, with the raw material situation for Asian Paints. But on the technicals and the way the stock has moved, what would you recommend?
The charts are still steady for Asian Paints. There was this bit of a correction in between. I think just a couple of weeks back when the stock fell from 1450, 1460 levels to sub 1400. But nevertheless, I think it's made a very good comeback. It's been a steady comeback rather for Asian Paints, and that steadiness is indicating that this trend is positive and intact for Asian Paints. Now, on a short-term basis, I believe there could be room for another 40 to 50 rupees upside for the stock price, and if that happens, the stock could climb back above its previous long-term highs as well. So Asian Paints could be a good buy from a steady positional basis. 1500 plus could be a target range.
Okay, that's Asian Paints for you, 0.4% high today. But what's snapping its 21-day long gaining streak is iron ore major NMDC. This after iron ore major Vale has actually received the court note to resume operations at one of its mines. It's a 30 million ton capacity subject to local authority approvals. Vale may actually be resuming this mine, and do remember we were talking about almost 8.5% of iron ore, worldwide iron ore shipment market being offline because of the force majeure. But it looks like Vale is slowly trying to get back on its feet, and that's something that sent a blow down iron ore bulls. Chinese iron ore prices have tanked 6%, and today you are seeing NMDC snap out of that gaining streak. It's down 2.8%. Gaurav, let's talk about Sterlite Technologies. Today we are seeing some action come by in the stock price of this one.
In case of Sterlite, I'm expecting a short-term bounce which can be used as a selling opportunity. The bounce that has already started today can take the stock to 240, 245 level, and over there one can look to initiate a fresh short position. The medium-term outlook for the counter is bearish, so once the bounce is done, the stock is expected to head lower and can test its February low, which is near 206.
All right, for now 229 is where Sterlite is perched at. So that was one of the big losers in the media space, and what's actually causing the media space to be one of the biggest sectoral losers is Zee Entertainment. Not Zee Media Corporation, just change that stock over there, Zee Entertainment. What would be your view?
Well, the observations are that stock has shown a brilliant run-up, Mubina. In fact, after that 30-40% correction in one single trading session, stock has slowly but steadily come back to those previous levels. Now at these higher levels, there's a natural tendency of some profit booking, or people who are skeptical might try to do some shorting. That is visible in data. It's down by 4%. There is an open interest went up of 5 to 6%. But then if you look at, price action point of view, I think it is consolidating with strong support around 440. So yes, today's stock is down, but what charts are saying that till the time the stock doesn't go below 440, I think it is more of consolidation, and you take today's move with a pinch of salt.
Okay, so that's the entertainment, a view coming in from Siddharth based on the technicals. Kunal, Grasim Industries, I think this week itself has been a pretty bad one for this stock.
Yeah, I think it's seen some bit of temperedness in terms of price performance, because earlier the stock was going through a multi-week rally, 3 or 4 weeks on a trot, where we saw the stock recovering from 700 levels to almost 860. So it's hit some sort of resistance at this 860 zone. But rather than selling the stock on resistances, I think look out for buying opportunities, and I believe that the recent dip which the stock is going through, I think could be a good dip to buy the stock. 800 is the next strong support, and I believe that if the stock drops another 2%, comes back to that 800 level, it should be a very strong buy at those levels.
All right, Minda Industries, meantime, big mover today after Nomura has initiated coverage on this auto ancillary with a buy target at 490 rupees per share, as Nomura believes that the new areas of the business is going to drive growth. There's also that regulatory push to increase the value components for vehicles, and hence they are expecting strong ROEs at the rate of 20%, 22% with a healthy balance sheet. Well, unfortunately, that's all the time we have on this edition of Market Fatafat, so I'll have to wrap it up right here. Kunal, Siddharth, as well as Gaurav, thanks so much for joining in. And of course, stay tuned. We'll take the market action forward at 12 o'clock on Markets at Noon.